Yeah, Friday. What's up, everybody? Friday morning. Hope you guys are all having a great day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson, as we are about to do what we do each and every day, looking at futures markets from an educational perspective, identifying our breakouts, our reversals, and all that fun jazz. We are finally warming up here in balmy Houston, Texas, which is normally, a nice place to be, but it's been cold the last few days. If you're even hearing about it on the BBC, John, we know that it's a big deal. So, it was cold the last few days. So I apologize on Wednesday that I had to cancel the DMC, and yesterday, thank goodness, we had Justin and Herman filling in on the live trade room. So everybody that was in good hands. So let's go ahead and get started for our Friday. Knowing our Friday rules still hold. Friday rules tell us that as we head into the weekend, make sure that you are keenly aware of any gap risk or gap exposure that you might take. So let's go ahead and dive in. So starting with the S&P. So starting here first with our ES. And looking here at the ES, we did have a couple of down days in the last few days. I will be quite blunt and tell you that I didn't even open the markets Wednesday as we didn't have any power or any internet, and then yesterday I didn't even look at the markets until very late in the day. So this is actually the first time that I've really done anything at all in the markets for a couple of days. So give me a little bit of time to get reinvigorated, if you will, and we'll set up for today. So yeah, it got 43 hours. We didn't go quite as long as you, Trent. You are a trooper powering through. We were at like 36 hours, I think, without electricity. But good news is we have a fireplace, and we know how to use it. So listen, I call that hashtag first world problems, because I was without power for 36 hours. There's a whole heck of a lot of the world that's without power for a lot longer than that, and so it just makes me realize how much of a blessing it is just to have everything else that we've got. But I go off. So looking at our 4-hour chart, we are seeing a bit of weakness here on the 4-hour time period, and we do have. I don't know about that. I don't know about moving to Jersey. Ooh, that's going to be a tough one. So 38.76, we've got two little touch points in here. One clear touch point, the other one actually not quite as clear in the overnight, and we've rallied up from that point. Actually from yesterday's overnight, and we've rallied up from that point. But this, to me, is kind of our inflection point, somewhere down in this region, where we'd have to get below some of these lows for us to really be fully bearish. So I am not really looking at a whole lot of these areas for shorts. You might get a shorting opportunity here. Now, we had talked about the fact that on Tuesday morning, we talked about the breakdown coming from here as the only way to get down from this level would be a breakdown below that line. And so technically, you might have a little retest area up into here as a potential short right there at that 39.40. If I look at that on a 15-minute, my only problem on the 15-minute is this big, long green candle. Everybody see that big, long green candle? That means that we traded all the way down to here and then went right back up and retested that whole area. So that, just looking at that, makes me say, it's probably better to go right here. It's probably better to go up in this area, which is a bit smaller. Now, by the time we get up there, we'll be in an upward trend, and our confirmation entry will be very much in play. So we have to look at that as a confirmation entry and the place as an opportunity to get short somewhere up in there. Now, what about a long? You're technically coming up against a decent little supply area up in here, but that just might pull us back into one of these demand areas that exist a bit lower. And so when I look at some of these demand areas that exist a bit lower, my first inkling is to look down in here at the area near the pivot, but the area near the pivot not been touched yet for a while after we moved away, but not formed at a great time of day. So I don't really have a great short or a great long. I don't have either one, except for, and so I'm I guess our best long is this area here. That would probably be our best long area. Would be this overnight zone on the at 2 a.m. It doesn't look as clean on the 15-minute for sure, but that would be the best place to look. I want to take a real quick look at my volume confluence. So our line of control was pretty much where we turned in the overnight. Yesterday's line of control was where the market turned in the overnight. We have a naked, no, I said we had a naked line of control here, but actually we already bounced off of that once and came through it. So all of my lines of control have been accounted for inside of the market over the last 5 days. So we can't really utilize the volume profile as an additional odds enhancer for today. If I do take a quick look at we're on a 5-day chart. If I look over the past 5 days, volume, our key volume confluence area is down in here, which is right where our demand area happens to be. So this is our volume, and this is more of a flexible volume profile where we're looking at what did it do over the last X number of days. The prior one is the what did it do over the last each individual day. So over the last 5 days, this was our highest volume area right here. This is called the value area. This purple area is the value area, and this area right here is the point of control for volume at 3908. And our zone is right here just below there. So I think that actually strengthens that level that we just talked about from a volume standpoint, making it a bit more a slightly better level as we take a look at that. So, all right, and then we'll go back over the 20-day. Actually, even on the 20-day 1 month. This is actually our point of control volume area, so it actually lines up perfectly with our zones. So, all right. For those of you who utilize that as an additional probability enhancement tool. Next, let's go take a look at the NASDAQ. So the NASDAQ, we had a demand level, and this is the demand level that we had identified a couple of days ago, actually maybe even 2 weeks ago. Price did come down to that level. Looks like we pierced below it just a smidge before then coming up higher from that zone. So now when I look at this on a 4-hour, my 4-hour trend on this one definitely has given me some lower lows. Right, so we've definitely gotten some lower lows in the NQ on our 4-hour chart. This is actually a really clean bear rally short setup at this exact moment. Whenever we see that drop and then price rallying back up. Matter of fact, if I were to pull a Fibonacci on here, my guess is that I'm sitting right at a 50% retracement, or just about there. I actually just poked a bit above that 50% retracement of that most recent move, and so it's possible that we could reverse off of this and head lower. I would say from a bearishness standpoint, the NASDAQ is a bit more bearish than the S&P overall at right at the jump. And so your eyes immediately should go to this. Now the downside of this zone is that we came within the neighborhood of that zone anyway, and so it's really getting a bit weaker as we come into there with a bit of basing. Liz says, haven't we had a trend change to the upside? We've not come above the last swing high, Liz, on the 4-hour. And so, this is not like, oh, we're in a solid downtrend, I'm going to short this pig. It's just in the beginnings of a weak one. But let's get rid of all subjectivity and put our zigzag indicator on there. Right? So what I was looking at on the zigzag, I figured that this and this would be considered in the swing lows and swing highs. But ultimately, we've got 2 consecutive lower lows and 2 consecutive lower highs that I think would be considered. So either way, it's not a clear, clean trend, Liz. And so I'm good with you want to take a short here. My downside of this is that we have a little bit of basing here below this level. So candles up from the low of yesterday. Well, on an hourly chart, absolutely, Liz. On an hourly chart, I would say so. but I'm looking here at the 4-hour, and I'm just looking for the cleanest swings on the 4-hour, right? So on an hourly chart, I would definitely agree with that. I'm looking at the 4-hour though for trend. I'm kind of a stickler about that, right? I'm a stickler over the fact that trend is 4-hour and entry is the 1-hour. So that's kind of what I'm looking at. And so when I look at the 4-hour, as far as swing highs and swing lows, the one that I'm looking at, is we'd have a swing high, even on a 4-hour. My eyes, at its best, would be swing high, and this is really kind of nitpicking a little bit. If I was looking at all of the swing highs and swing lows, I mean, you could theoretically utilize. I guess you're using these, Liz, right here, and so if you're utilizing all of those, then I think that would probably be the way that you would do it. So I'm actually looking for. Yeah, I wasn't using the high-low indicator. I was using the on the close, and that's kind of the one that I like there. Now, I'm okay with because by the way, I'm not sold that this is a great level. I do actually like this area down here better for an entry. Yeah, 4-hour down. And Liz, I wouldn't say that it was a clear 4-hour down trend, right? If you really look at it and you go to the 4-hour, on your 4-hour, it's, and that's why I like the zigzag. It takes away all of the subjectivity. Technically, on a 4-hour, we didn't break the uptrend. If you really, because I use the zigzag to kind of give it to me, we didn't really break the uptrend because we didn't technically yet have a lower swing low. Right? I mean, we're seeing, well, and Sava, these big pullbacks after all-time highs, similar to how the market was reacting in 2019 to 2020, something to consider. I mean, a little bit. We typically pull back after we reach an all-time high. That's actually very common. That we're going to pull back after we reach an all-time high. And so right now, I wouldn't be surprised if we went from here down to here and then rallied back up. If we take out these swings, then for sure this, I think that this is probably a confirmation at its best. And if that confirmation gets blown right through, then this becomes a really good entry down in here. Matter of fact, you might actually get a good entry right here if this confirmation gets blown through. So, all right. Next, the Russell. Now, the rut, when I look at the 4-hour on the rut, we have a little bit of almost a double topping pattern here on the 4-hour on the rut. So, no, I don't want to delete it. So looking here on the 4-hour on the rut, we do have a little bit of a different kind of price pattern and movement, and it's been a little bit weaker here over the last few days. Matter of fact, I want to take a real quick look at my performance comparisons of these major markets. All right, so looking at our performance comparison over the major markets, the rut is by far down the most, right? Down 3.6%, followed by the NASDAQ, followed by the S&P, followed by the Dow. So when we see that, that's typically something that has a better chance of continuation. Now, not always, and we're only looking over the last 5 days, but what that tells me is that if I am going to look at a short, I'm better off looking at a short in the Russell. Right? Jersey Trader, for a 15-minute zone, would you base off the 1-hour trend or still use the forward? Yep, I still use the 4-hour trend. I'm still going to utilize the 4-hour trend. And the reason I still use the 4-hour trend is because that's my main decision-making time frame. That's what tells me, am I a buyer or am I a seller? And that's the one that I want to lean on the most for my decision-making. The 1-hour is where I find my best zones. If I can't find a good zone on the 1-hour, then I can move down to the 15-minute to zoom in. I call it the zoom lens entry, if you will. But when I look at this one, this makes me feel a lot less comfortable about the supply level we just talked about in the NASDAQ. What's my problem with this level? Well, first of all, that's a pretty clean little level formed at a decent time of the day. Very strong move away, but we're giving it the old kiss of death, right? We're getting the old kiss of death here in front of the level. Now that level was formed 5-6 a.m. When I go back to the Nasdaq, this level here um, formed at a slight, roughly the same time, although a different day. I think it might be. I don't think that's formed at the same date. Tuesday, Wednesday. Yeah, so not formed at the same date. So that the S&P level is the Nasdaq level is this one here. So this is a different level altogether. But this is kiss of death, no doubt. I mean, we're basing right here in front of the level, which makes it that much weaker. I will say that this level here, very clean. But with this being our weakest market, this has to be a confirmation entry. When I look at this on a 4-hour trend, I don't really see anything super clean for a reversal. So while, yes, we have come down, I theoretically could see a good solid argument for saying, hey, listen, we've come down, but I don't know that we're going to stay down because I don't have a lot of clean supply entries in here as a place to get short, right? How do I know that? Well, I look at my current price. I look up and to the left. So as I look at my current price and I look up and to the left to identify that move down, here I've got a little bit of basing, but we're basing in front of the zone. Here we're basing very sideways, and there's nothing clean about that. This is just a yuck retest of one another. So none of these supply levels are enough for me to jump up and down and say, ooh, I want to short this thing. None of them. And so, and if we come back up and gain some more strength, this could be a decent bottoming pattern, especially if we start to get through, call it this 2260 area. If we get through this 2260 area, then we've got some confirmed bullishness back on our side because we've taken out some of those highs, and taking out those highs would get us kind of that confirmed bullishness back in play. So unfortunately, I'd love to tell you that I've got these great trades lined up in these markets today, but I just don't see. And once again, this is the first time I've looked at these markets in a couple of days because I was, trying to stay warm. And I will tell you, I'm not going to try to trade off of spotty tethered phone internet. That's just a terrible idea. But looking at this, I've got nothing real clean on a supply level. I don't know if anybody else have a level that you want to take a look at in these markets, because I just don't see anything super clean on either one of those for me to be willing to spend my money on. Breakout trade above here in the Dow Jones. The Dow Jones is the one that has been probably the best performer in our markets without having the same amount of weakness. All right, let me put my grid in the markets here. All right. Next, let's move over to bonds and commodities, energies, and metals. All right, so looking next at our energies and metals, and starting first with crude oil. So crude oil, we had a really good area of demand that came really close to getting filled and didn't quite get in. Some of you may or may not have had that trade set up ahead of time, and maybe you got in a bit early. I did not have it set up. I didn't even look at this thing, but it did bounce off of that level, and so close enough to that level for me to say that level, while still valid, must be a confirmation entry, and even that is questionable with the momentum that we're seeing coming straight down out of here. When I look at this on a daily chart, this is just a nice normal little pullback. Nothing too crazy for us to get all up in arms about. And so the next area that I would, anticipate a bounce, you might get a pullback even all the way down to this daily wick over wick area. I'm going to circle it because I got so many dang lines on here. You might even find an area down to this daily wick over wick area if we start to break through some of these demand zones below us, that would be what we would see occurring. Now, why would we break through those demand areas? Because our trend would change. Well, has our trend changed as of yet? Not really. We've got a lower swing low, but we do not yet have a lower swing high. If I throw my zigzag on there, we got a lower swing low. I guess it's picking up this last pivot here as a last little swing. I don't know that I would consider that a truly a swing. My eyes tell me it's probably not, but it's definitely a heck of a lot weaker on the uptrend. But we are getting some buying pressure down here. I wouldn't be surprised if we get, actually, you know what? I'm going to remove the demand zone here. In looking at this a second time, I think if we get basing in here, you've actually got a good breakdown candidate. And the reason for that is because we did try to come up from there and just were unable to create a new high. And by being unable to create a new high, what it did was it sets up for a potential breakdown. And then I think you've got room to run down to about 58. So you can pull out 50 ticks from this pretty quickly. Now, the question then becomes is how many ticks a day do you need in the crude oil to make to make it work? And that's totally up to you and your trading style. This little level here was a really nice reversal point where we gave it a quick touch and go. So I'm gonna utilize this area again, knowing it's a confirmation and it's a super small confirmation level at that. But I really, really like the setup of that level, especially since it was an area that was resistance. We had come down below it, rallied up, drop, base, drop, gave it a quick retest on just a touch and go, and it hasn't been back since. All right, gold. Looking at gold. So gold, we got to our breakdown line, and then it kind of like stalled out here on us. So looking at gold on our 4 hour, our trend is most decidedly down in gold. Got to our breakdown line, got a little bit of basing, hasn't really done a whole lot since the breakdown line. I still think that the breakdown is imminent and that better probability is for gold to continue to come down lower. Now, we were looking at it earlier in the week and said, hey, there could be an iron condor expiration, and we're right at the very bottom of that iron condor for today. So the outside of that range, if you remember, I think was 1760. So we're right at the very bottom of that range. So we've dropped about 100 points in the last few days, last 2 weeks or so. Dropped about 100 points in gold, and the trend is stronger to continue to go down. Looking at this on a much bigger chart, going all the way out to the daily, none of this is super clean demand. None of this demand is overly clean, and so the best trade that we had was this area here from Tuesday's DMC. Hopefully you guys that were in here on Tuesday, this was our Tuesday entry, was this little drop, base drop below this pivot. And it was a good setup for a good short entry, and it has continued to run down ever since. Now, that level, to me, is still valid because it was just a touch and go off of the zone. But looking at this on a 15-minute chart, once again, where are my next clean areas of supply? I mean, I got to come all the way up here before I find one, of really any importance or really anything that makes me feel like it's a quality enough zone. And even that's, pretty far away from current price. So by being that far away from where price is today, I'm just going to be very patient and allow those things to set up and hold off. Questions on that one? Thoughts on that, on gold? Because there's not a whole lot in there, I think, as far as great supply levels above us, but there certainly is no great demand below. So I'm still okay if you're a little bit more of the mindset that we're going to continue to drop. By the way, knowing we're heading into a weekend, and so you've got to be comfortable with the risk if you're going to hold it over the weekend. Now, speaking of holding things over the weekend, our notorious gapper is Nat Gas, right? The notorious NG. Nat Gas is notorious for gapping on a weekend. And last weekend, we had this big gap up. And then we had, after the holiday, we had this little gap up here. Where's the gap going to be this weekend in Nat Gas? Well, we've really sold off hard in the last few days. Now, why we sold off hard in the last few days with temperatures plummeting is probably because they see us kind of coming out of this. And the draw on the inventory numbers yesterday were actually not as high as expected. So there was a draw yesterday, but the inventory numbers were not quite as high as expected. And so I'm actually interested to see what happens with this area here. I don't think we're going to make it there tomorrow, but this is obviously a whole round number. I don't think we're going to make it there today, but I'll be interested to see where we gap over the weekend. So, in order for a weekend gap to exist, we've got a gap in the direction of the predominant trend and outside the prior day's range. Well, technically, our predominant trend is still up as our swings haven't really changed. So, if for some reason we gap up somewhere into this region, you may have a decent gap and go, but that gap and go is going to be stunted by the supply that exists up here. So, we're just going to be patient on this and wait and see what happens on Sunday. If today, for some reason, we get basing in front of here, I think then you have a breakdown right into that region. All right. And then copper, we had taken a look at copper on a potential breakout trade earlier in the week. We showed, okay, if you didn't catch the breakout trade, here's the reversal right back in here. And the market gave us an almost fill on this one earlier this week. And so copper still bullish, but now when I look at copper, I'm going to look up here at my best level, 39216. All right. Hey, if you guys haven't done so already, do me a favor. If you're watching, hit the thumbs up icon on YouTube. I'd appreciate it. It means a lot. Helps the algorithms know that you care. And every like makes me smile. Let me share these commodities out. You guys all right if we go a little long today? I feel like we're going to run a little bit over our normal time today, only because I haven't looked at the markets this week, and I'm a little bit slower than normal, doing a little bit of explanation since yesterday I didn't even get to do our live trade room yesterday morning. So, soybeans. So looking at soy, we had the breakdown that never was because we didn't get the basing in front. Man, that was a great short, wasn't it? Oh, Trent, you're killing me, Smalls. I still love you, man. Soy. We really had a nice level here on this gap up and then moving away, and we haven't really come back into that at all. That's all right. I still love you, buddy. I still do. It's okay. How a man like you can sleep at night after making fun of me, but that's all right. Calling me Corey's not that's a compliment. So here we have a rally base, very strong rally. But this is in the context of what really is more of a sideways trend. And so when I look at this, I'm not in love with this area of demand. I'm okay if you want to give it a run, if you're willing on the speculation side of things. But this is what I'm looking at is just inside of this pinch. Let's see. Family 8MM says if Nat gas gap's down, you've got a great candle setup for on the week chart. I'll take a look at that in just a moment. I'll go back to that one. And so I see that in soy. I also see the same picture essentially in corn. Now, corn, I think, gives me a better potential upside breakout setup than the other two, or than soy does above here. I think that's a cleaner upside breakout because I got clean air above here. So at least that one gives me an upside breakout. But everything else is pretty sideways. Bean oil is pretty good for an upside breakout as well as what it looks to be. But everything else, for the most part, is pretty sideways and really not worth me jumping into. Let me go back and take a look at that nat gas on a weekly chart. I typically don't look at that one too much on a weekly time period. Actually, I don't look at anything too much on a weekly time period. Yeah, that's definitely a gapping down candle. If we gap down into this region, that's a really great spot. You're right. So it is a strong possibility and a strong potential. But if we gap down, I'd be interested to see if we gap down, if that becomes an island reversal gap and that just drives price a bit lower, especially heading into the spring. Well, Scott, that would make sense that it would increase the demand from a fundamental standpoint. that it would increase the demand from a fundamental standpoint as far as, but I don't know enough about the seasonality of ags, and I don't pretend to know enough. This is not my, I mean, I look at the charts and I understand the charts, and I think we do a pretty good job of finding our areas of supply and demand. But when it comes down to seasonality and knowing when they plant the crops and knowing how the harvests work, I don't comment on that as much because I don't know as much about it. And Grandpap taught me a long time ago, Chaz, if you talk about stuff you don't really know, you just sound like a jackass. All right. So then let's move into our bonds and currencies, and that's, by the way, all I would be doing, because I don't understand this. I've never really even gotten into the seasonality aspect of it. So looking at the ZN, which is our 10-year note, we had looked the other day on a swing trade off of this area here. So leave me a comment below. Let me know if you're still in the swing trade from this short. Remember, we talked about this as a swing trade position, and I think now it's setting up for price to continue to move down. We got a little bit of I'll call this a short covering rally right through here, or maybe or something along those lines. I think the next leg down from here is going to be the stronger move. Now we're bouncing off of a demand area, and it's a big demand area if I go all the way to the left. And it's a demand area that it didn't seem big at the time because our range was so wide. Oh, come on. But now looking at it relative to the ranges we're seeing today, it's super wide, and we've not done anything off of that level. So because we've seen essentially our whole range just shrink down to next to nothing on these bonds. So looking at it today, where I would go for a reversal is going to be this area. I mean, this area just above me. We actually just got a wick back into it. You might want to just consider yourself the breakdown as the better place to go. Just looking at the breakdown below this region here, I think is probably the better way to go. ZB, same picture. Actually, this is an older breakdown line that we had drawn a while ago that's still in play. And I think we're going to break down below here for price to keep dropping. All right. The euro. So once again, the euro and some of these lines are a bit older because and yesterday I just glanced at the markets later in the day because my internet didn't come back till late in the morning, and I didn't even glance at the currency. So some of these lines are going to be a bit old on here, so bear with me. This area here that we had of a 15-minute area of demand. If you were looking at this yesterday morning, more than likely you probably looked at it and said, hey, this is probably not a great idea with all this basing here. And look, we're basing it right here in front of the level. And then we cut right through it. Now, we didn't just cut right through it. We did stay below it for a little while and wound up utilizing the actual pivot as our reversal point for price to then move higher. So what I would say is that based off of that move higher, our 4-hour trend is a bit on the kind of, I mean, it's ugly, right? It's not pretty. It's making me go, so there's not enough prettiness in that trend for me to be excited about. But I will say on a 1-hour structure, this is very clean on a 1-hour structure, right? I mean, this is a rally-based rally above a pivot low. Stop has to go obviously below the pivot. And that would be a really big move down for price to get there in the next few hours. But you may get a reversal off of that for late morning, early part of the afternoon. Canadian dollar. Wow, we've rocketed straight up on the Canadian dollar in the last few hours, haven't we? In looking at that, very similar picture as far as good area, same form of the time of the day. Really, really strong move higher. It's now basing in front of a potential breakout area. If we get a bit more basing, then our breakout is very much in play here as well. Could set up on a bit of a tweezer top for price to pull back. If it does pull back to me, these are all kind of retesting of one another and a bit of a incestuous level, and so nothing that I think is going to be the best thing to lean on for high probability. All right, so damn thing, darn thing. All right, let me share this one out. All right. Quick announcement, real quick. Hopefully, you guys all remember that on March the 1st, as of March 1st, our daily market commentary is going to change the format. We're not going to be live anymore as of March 1st. So remember that as of March 1st, it is going to a recorded DMC, and we will have 3 trading the open futures markets every week, 3 a week trading the open. Plus, we're still going to have our Thursday morning live trade room. And our Tuesday morning options room, and our Sunday night futures room, and our Wednesday evening open forums and options deconstructed sessions. So, and wealth essentials. So those are all going to be available at tradersarmy.com. We're changing the format a little bit of the DMC. So just a real quick announcement, a reminder for those of you that are watching the DMC every day, it is going to change format a little bit starting March the 1st. All right, New Zealand dollar. Starting off. And this one, we put this little demand area here in on Friday, a little bit in, on Monday, saying, hey, couldn't we get a bounce off of this? And that was a definitive no. I got to tell you, I'm just not going to look at this one for a couple of weeks. I feel like I keep looking at it, and it just keeps frustrating me more and more and more because there's just not great trades that have been set up. We were stuck in this range here. First, we were stuck in this range here, and then we poked above it, but then it blew through the demand level that where we would see a reasonable return. And now we've popped up above this high in here. So theoretically, that should mean that the demand area that caused price to go through it, which is down here, would be a good buy on the return. I've been burnt on that twice in the last 3 weeks, and so I'm going to hold off until I get a more definitive trend. I'm just not going to look at anything on New Zealand dollar because I think that there's a bit of fishiness going on with blowing through stops here lately, and I think it's better to just kind of wait up. So, all right, Great British Pound. So in the Great British Pound, we did get a really nice reversal off of this demand zone. Poked a bit below it, but not enough that would stop you out based upon the rules. Moved up about 3-4 to 1 off of that level, and then it's throughout the rest of the week. Now looking at the 4-hour, trend is still very, very strong, very, very high. You would anticipate from where we are a bit of a corrective pullback as a chance to get long. And when I look at the corrective pullbacks, what my mind goes to is pullback 1, pullback 2, pullback 3. What do we notice about each of our pullbacks? Impulsive move 1, impulsive move 2, impulsive move 3. What are we seeing? Tell me what you're seeing there when you look at that. Looking at those impulse and corrective moves. Now, this isn't picking it up because it does 0.5%. Let me see if I move it to the 1 hour, if it'll give me a little bit cleaner picture. That's actually pretty good. So impulse move, corrective move, impulse move, corrective move, impulse move. It tells me that we are seeing our corrective moves. Yeah, our pullbacks are getting a bit longer each time. Does it mean that our uptrend is over? Not at all. Not one bit. It just means that we could have a deeper pullback this time around. And so if I look at our prior pullback being of this length, if our next pullback is a bit longer, If our next pullback is a bit longer, where does that take us? Well, what if it took us to here? Well, that would put us squarely at this reversal point right in there. So I think that if we get a longer pullback, it actually bodes well for a long setup right in here. We may not get a longer pullback and an opportunity to get in on that one. And if you think that the shorter pullback is the better play, then on a 15-minute chart, you've actually got a decent little level right here. So I'm okay with either one. The 15-minute level is a bit more aggressive, but it is a pretty clean entry at its own right. The 1-hour level is a bit less aggressive, a little bit less aggressive, but probably still just as safe. So I'm okay with either one of those. What I'm not okay with is just trying to pick the high and just trying to reverse off of a high. I think that you're better off trying to play a pullback. Now, notice whenever we have demand that's not been retested, then we know for certain that we're in a very strong bullish position. Once we start breaking through some of these demands, then we would start to say, okay, now I can look to short. But just a tremendous amount of strength in the Great British Pound. And if you think about the pound, just over the last few months, it's gone from 1.14 to 1.4. That's a humongous shift in the overall direction of the pound. And for those of you that don't trade currencies, let me just very simply say this. That means that one Great British Pound down here, right? One Great British Pound was worth about 1.14 US dollars, so about a dollar to $1.15. Now, one Great British Pound is worth about 1.4 US dollars. So it's shown that the dollar has got a tremendous amount of weakness, and that weakness has continued, and that the pound has a lot more strength. And so strength typically begets strength, and they're typically long-running trends. I wouldn't be surprised to see us retest some of these highs up here. Oh, that is Justin's level from yesterday? Okay, good, because I hadn't talked to him about what his levels were. All right. And then let's take a look at the Japanese yen. So looking at our yen position, we had a bit of a supply level up in here. Now, we did get some basing in front, but definitely not enough that would have scared me away from it, but we cut right through it. Now, you got to be in front of the market to take that one anyway. Now you've got a potential breakout above here, as we had a breakdown below this region. This is two separate breakdown areas. This breakout is still potential. Looking at the 4-hour, we're seeing again the same thing that we saw last week. I think it was last week on kind of this short covering rally. I think it's probably another opportunity on the short covering rally. I wouldn't be surprised to see us break through this little breakout area and then utilize maybe this area up here as a reversal. So if we break out, you don't have a ton of room to roam. That to me is actually a pretty clean reversal point. And then the Aussie, Jesus, criminally, we just rallied back up. Yeah, that's a good point, John. I think there's been throughout history. I think people have said that the British would collapse, but it just doesn't seem like that's going to happen, right? So, so the Aussie. When I go back and look at this, I got to go back much longer. I mean, on a 10-year weekly, are we going to make it all the way up to here? That's where that is in reality, that's the cleanest area of where price target would be on our longer running trend. It would be to make it all the way back up into here. Now, just remember, by the way, that if you want to trade these longer term trends, then the currency market is better than the futures market, right? You're better to do it on the spot position and hold that spot position a bit longer. We are coming up to a supply area, but certainly that's against our big picture direction, and it's against the momentum. So if you want to take this, it's got to be a confirmation. But I would only take it as a pullback back down into one of these regions, and I think that the best one is down here. Don't know that we're going to make it down to there, but that would be the pullback area to look for. All right, let me share this one out here. All right, so I went about 50% longer today than I normally do. So hopefully you guys are all good with that and you're able to pick a few things up. Now, Sunday night will be our live trade room once again. So if you guys have anything that you want to look at for Sunday night, we will gladly do so. But I would tell you for today, don't force anything. There's not a whole lot that's jumping out at me that says, ooh, that's a good one. Most of it is meh, and even the meh is questionable. So if you guys have any questions, as always, send me an email, chuck.fulkerson@tradersarmy.com. Thanks, guys, for joining me today. I appreciate you. Happy Friday. Stay safe. Those of us that are in Texas, we're finally looking at the potential for a thaw to stay warm. My friends in Houston and Austin and Dallas and all the iced over parts of the country, best of luck to you. I heard, Liz, that up in your neck of the woods, that you guys were getting some ice storms as well. So best of luck to everybody. Stay warm, stay safe, stay dry. And John, you guys have better weather over there than us this time of the year. So, all right, guys.